All right. Final expense burial insurance. Are these actually state programs? And what's up with the $255 lump sum death payment from the Social Security Administration? Yes, it's embarrassing. If you're new to my channel, my name is Ed Weir. I ran the third business Social Security office in the country. And in my kind of semi-retirement, I'm helping people with all things Social Security, retirement, disability, survivor benefits, spouse benefits, Medicare, Medicaid, and all the rest of it. Part of it is that infamous lump sum death payment that I've given out hundreds of thousands of those checks, the $255, and no one has ever said, oh my gosh, this is awesome. So it's been like that for decades and decades and decades. And there's a lot of people out there that need something to take care of their loved ones, because once you shuffle off your mortal coil, then you ain't going to need that money anymore. It's for other people, and that $255, that ain't going to do it. If you got a few $1,000,000 on your, a few $1,000,000 under your, your mattress or something like that, you probably don't need it. But for everybody else, it's good to check out, think about it. So what my community has said, Ed, who can we trust? Who can we reach out to see if we actually need it, we can afford it, what it is, explain it to me. So my son and I looked, and we already knew who was going to help you out. So that's why we got David here today, David DeFord. And he has been doing final expense burial insurance. We'll talk about what the names, is there a difference? So welcome, David. How you doing?
Fantastic. That's good to be here. Thanks for having me.
Yeah. So let's get right into it. We'll try to make this as short and sweet as possible, and we'll put your phone number up if people want to go over their options. They can reach out to you. But first of all, what is final expense and what is burial insurance? Are this one and the same?
So in short, they're the same thing. You could even simplify it even further. It's really life insurance that's designed to cover your final expenses, cremation, or burial expenses. So when you think final expense or burial insurance, no, it's the same thing. And even if I say life insurance, somebody else says life insurance, it's basically the same idea as well.
Okay. All right. So, who should get this burial insurance? Are your most of the people that you help out?
So really, I think the perfect person that should own a burial final expense plan is somebody who is concerned that when they die, because it's going to happen to all of us, that there might not be enough money on hand readily available to pay for those final expenses. Or maybe you don't want to shift that financial burden to a loved one like a surviving spouse, or in many cases, children. And you feel like there's some sense of duty or responsibility that you should pay for it, then you would be a perfect candidate to have a policy.
Yeah, I've had some of those. I've taken hundreds of thousands of survivor claims. So surviving spouses, and they've come in and they've recently lost a loved one, and they talk about that. And I've had some interesting stories. Yeah, I have some people that have had those, and so they had all their paperwork there, the death certificate and everything like that, and they were saying, "Oh, I've also got this," and they start telling you. This one lady, she had a will, and it said, "Okay, we've got this this life insurance, and I want you to take care of it all. But the first thing I want you to do is I want you to celebrate, all the awesome stuff we did and stuff like that. So here's a bunch of money," and I think it was to Hawaii or something like that. So it's for her, the kids and the aunts and the uncles and the grandchildren and stuff like that. He left a lot of money in there for them to have an awesome weekend vacation in Hawaii. So you can pretty much use it for whatever you want, right?
Yeah, it's life insurance designed for whatever the beneficiary wants to do with it. Like I used to joke with my clients, they could put you on ice and go to Hawaii, and the life insurance company, that's not their job to decide where it goes. It's to who it goes to. So really it can be used beyond and above payment for funeral expenses. Some people buy it to supplement income so that a surviving spouse has something to pay or have something on hand to pay. Others actually will use it to help pay down a note on a house, like a mortgage, or to pay off a house. So there's all sorts of things you can do with it. Just think about it as money in the hands of a loved one to take care of any remaining expenses that you deem important.
Okay, perfect. And for those that are new to my channel, I do a live Q&A pretty much every day, and I've got a website, mygovexpert.com, you can check out. And for surviving spouse benefits, there's the life insurance and that lump sum death payment, but there's also surviving spouse benefits. So you want to see whether you should get that, or you should start retirement benefits first, and you have those options. So make sure you watch. I've got a bunch of videos on surviving spouse benefits and a live Q&A if you have any questions. Okay. So there's some things that you really need to avoid when you're looking to get a life insurance, burial insurance policy, correct?
Oh yeah. Yeah. They're not all the same. And you got to be very wary of the fine print for sure.
So what are those? Let's go with number one. What's the number one thing people need to watch out for?
So some of your audience might actually be a little surprised and shocked, because there are very well-known people in the financial planning space that would argue with me, but I'll give you my best rebuttal why I think they're wrong. And that's you should not get a term insurance policy. So let me describe for the audience, if they don't know, what term insurance is and where it's good and where it's not so good. So a term insurance policy really can be thought of as terminating life insurance. It's really, as far as the good side of it goes, it's the best way to get the most amount of coverage for the least amount of money, up to a point. Because here's the problem with term. Like I said, it terminates. So if you outlive a term insurance plan, that amount of coverage that you purchased, it's not there anymore. It terminates. Okay. So what's the problem with that? The nature of death is unpredictable. Although we know it's going to happen with 100% certainty, nobody's gotten out alive yet. We do know it's going to happen, but the date of which it happens, we don't know. So therefore, if you have a term insurance policy, you're really taking a gamble that you're going to die before the term terminates. But that's not any sort of gamble anybody can take with any sort of predictability that's insurable or guaranteed to happen. Right. So this is why I don't like a term insurance plan, because nobody knows the date of your death. So why buy a policy that you make a gamble on it's going to happen? The second side of term, Ed, that's really important to understand. You see this with a lot of the junk mail that a lot of y'all get for all sorts of insurance plans, is that these term insurance also increase with age. Now, I'm sure a lot of your audience is on a fixed income, maybe disabled, certainly retired. Social Security doesn't go up by that much every year. But a lot of these term insurance plans are designed to go up in incremental periods, typically every 5 years, by substantial amounts. And by the time that these folks reach their 70s and beyond, the price increases are exponential. And for many, it gets to the point where the clients, when they need it the most, can't even afford it. I remember early in my career, I had a lady I sat with who she was paying $50 a month, right around there, for her term insurance plan. Well, she turned 76 and her price went from 50 a month to 140 overnight. And this was a person making $800 a month on disability. And she had to make that decision between her life insurance, which she needed, but also for her food and her medication. I bring this up because this is not a position anybody wants to be in. It's probably what a lot of people listening to this fear, is making those hard decisions, because she can't really say no to any of it. She needs it all. And so this is why you got to be really careful with term. It's not bad insurance, it's better than nothing. And it's very appropriate for people who are younger. Yep. But as you get up in age, these are the things that really come back to haunt you. And there's nothing worse than talking to a person who can't afford their insurance after paying it for years, or God forbid it cancels because they live too long.
Yeah, term insurance. Yeah, definitely. When you're young, that's definitely the way to go, rather than whole life and all that stuff. But once we're getting along in years, and if we're lucky, we are getting along in years, then everything kind of changes. So, all right. So what's next for the things to watch out for?
Yeah. So the other thing you got to be careful of now, some people, this is their only option, but for many, it's not. There are better options. It's called guaranteed acceptance insurance. So the concept behind it is nice. It's no questions asked. As long as you have a pulse, you can get approved for coverage. I mean, it sounds great to a lot of people who maybe have had health history issues like diabetes, cancer, heart issues, right? Oh, they're not going to ask me about my health. Why don't I get this? Well, what's the catch? That's what you should always be thinking, because
Right.
doesn't insurance ask about health? Yeah, of course. So what's the catch with guaranteed acceptance? Is that everybody who gets a policy with guaranteed acceptance at least has to wait 2 years, sometimes even 3 years, before they're fully covered for natural forms of death. And the thing is, Ed, most people die from natural causes or issues related to natural causes.
Right.
So there are people out there literally right now that have these plans. They don't know this, and they're going to die because of a stroke, cancer, and the coverage they think is dependable. When the loved ones go file a claim, they're going to find out really quick they're not getting the full death benefit. They're just going to get their money back. Okay.
Right.
So you can see what the problem is. And so what you want to do instead is get a plan that actually does ask you health questions. There are plenty of options out there, even with history of health issues, where the chances to be fully covered for natural death is very high. And it's again, it's like, if you're going to play the game, play to win, right? You may have to go the route of a guaranteed acceptance plan, which they have their place. They're good. But to start with that being your only option isn't the best way to play. You want to get coverage that's going to be the best suited for you. So
Right.
leave that option as the last choice, not the first choice.
Perfect. Okay. All right. And then number 3, what is the third thing to watch out for?
So the third type of plan is called universal life insurance. Now, this is an interesting plan. I'll try to keep it as simple as possible. It's been around for about 40 years. And it was a plan commonly sold in the 80s. You still see it today in the form of index universal life plans. And those can be done and created correctly. But the problem that a lot of people ran into is that they created these universal life plans to be very cheap in premium, but the agents didn't disclose that as the person got older, they would require more premium to stay in the force and effective. And so what we have, there have been Wall Street Journal reports on this, I think even in the New York Times, is that these people that have had coverage for 20, 30 years that stayed the same premium, all of a sudden overnight became very expensive to the point where they couldn't afford it anymore. Very much like a term insurance policy does, because that universal life plan was inappropriately designed. So if you're out there and you've got a universal life plan, you've had it for a long time, you need to do a policy review. You need somebody to take a look at it. You might be sitting on a ticking time bomb. A lot of people are, because the agents just didn't keep up with the client, didn't design it correctly. Right. And even ones that were taken out in the last 5 or 10 years are also problematic, because a lot of agents don't know how to design those plans correctly. And they design them to sound good on paper, but over time perform poorly and end up requiring a premium rate hike that was never disclosed by the agent to the client. So be very wary of universal life insurance. It just, many times the juice isn't worth the squeeze, as I say.
Right. Life changes, situation changes. Yes. Okay. So if people call you, what do you usually recommend? What type of parameters do you, what type of questions do you usually ask? What type of price ranges, what type of coverage, just general. I know everybody's a little bit different, but what can people expect if they pick up the phone and give you a call?
So now we told you what not to do. Let's tell you what to do. So we're big believers, for the most part, 95% of people that call in that fit the profile wanting to take care of final expenses, to get what's called a final expense whole life insurance plan. Okay. Again, there's exceptions to the rule, but the rule is the rule for a reason. So what is that? So final expense whole life insurance is designed to last your whole life. So it matches up with the idea of what we're trying to insure, right? We don't know when you're going to die, but it's going to happen. So you need a plan that's going to be there in perpetuity. Whole life insurance does that. Other benefits include the rates
never terminates unless you stop.
Yes.
Unless you stop paying it, right?
Yeah. If you stop paying it, you lose your coverage, like car insurance, right? It's the same concept. Yep. But other than that, as long as you're around, it's around, as long as you pay the premium. Also, the rates never increase due to age or health. So as long as you pay the premium, you never have to worry about the dreaded rate increase letter, and you can fix it in your budget. Very fixed income friendly, as I like to say. And then the nice thing, at least working with my company, the Dig Agency, we work with a collection of different life insurance companies, and each one has their own kind of health questions that they ask. And our job as your agent is to figure out which combination of price and coverage is going to be best for you to get you the best value of coverage. So that way we're not pushing product on our client. We're earnestly trying to find the best option that's available out of the many options that we have. So we'll
Okay,
ask.
so you're technically, because my audience knows the difference because we talk about this all the time. You're technically not agents, you're brokers. So an
Brokers
agent
would
kind
be,
of, yeah,
yeah,
you're not a captive agent. You don't work for this company, and therefore, what do you need? Well, this is all I got. So this is what you're going to get. You work for the people that call you, and you just go out there and look for the best thing that matches their needs, right?
yeah, yeah. And I can't stress enough. I
Okay.
mean, a lot of our clients have had diabetes, cancer history, heart history, lung issues, COPD. They're on from very few prescriptions to a lot. And if you just come in with one company, no matter what it is, they could be great companies. They're not going to always be the best option. The best thing to do is to deal with a broker, whether it's with us or somebody else, and shop those options to see what's out there, see what's best suited. So yeah, we're
Perfect.
looking out for the client, because at the end of the day, that it's more bang for your buck. And in many cases, you can get better quality coverage too.
Perfect. Okay, so what other what did we miss there? Prices, coverage. What else did we want to talk about?
So with whole life insurance, I mean, it's pretty simple. It lasts your whole life. Premiums never go up. Keep paying the premium. And if you're medically eligible, then you can be fully covered from the first day of payment for natural death. So again, contrast that against that guaranteed acceptance we talked about, where it's always a 2-year wait, if not longer. With some of our options, if medically everything looks good, which they're generally easier to qualify for, then what happens is you'll be fully covered from the first payment. The other thing I'll add, very important, no medical exams. You don't have to pee in a cup, give blood. All of the medical examination or medical check is done over the phone. They just look at your health history. That's pretty quick. You can get in and out in a matter of minutes to see if you're approved. It's not a painstaking process at all.
Oh, okay. So people call you up, and they said, "Okay, let's kick it around,"
Yeah.
and then you ask them what are the kind of questions you start asking them?
Yeah. So what do you want your policy to do for you? Kind of walk me through what you want it to accomplish. It's very important for my team and my company to understand, okay, you want coverage. What do you want it to do? Maybe you want the Folgers can cremation, Ed, and maybe you don't need the $20,000 burial plan. Maybe a 5,000 or less would be more sensible, right? So we want to make sure we get the policy custom tailored to you that actually represents what you want to accomplish. Okay.
Yeah.
We don't want to sell you something that you don't need. So we're going to ask you some of those type of questions. We're also going to ask you what you can afford. Look, there ain't no reason to get a policy that you got to drop in 6 months because it was too big to begin with. We train our agents very carefully to make sure you only sell the person a policy that they're comfortable with, because you want to, in a sense, kind of get a policy knowing you can keep it and afford it, because it's only good when you die. And that can be many years from now. So it's very important for us to get it reasonably affordable for you so you can keep it in your budget. And then from there, we just ask health questions to see what the options are. And then we show them to you. And then you just tell us if you like it or not. And then you go from there.
Okay. Perfect. All right. So last thing, a lot of are in our community. I get this pretty much on a weekly basis. They said, "Hey, I just got this thing about there's this state-sponsored payment if something happens to me," and they get mailers and calls. And what's up with state-sponsored? I forget what terminology they use.
Yeah. So first rule of thumb, if you ever send one of those cards back, you'll never be let alone ever again. They're going to call you up. They're going to stop by your house. And I know because, we used to, get those cards back in the day when I was an agent in 2011. That's all we used to talk to people. So don't send it in if you don't want to talk to a salesperson, number one.
All right.
Number two, the lead card, the card itself, it's just talking about life insurance. It's nothing special. It's written in a way to sound special to entice you to send back. To understand that you could get an agent that has that's a great agent that has lots of companies available, life insurance companies, or you may talk to somebody who, like you were saying, is a captive agent and only offers one, but you can't really tell that by looking at the card. So there's an element of risk. You don't know what you're going to get. But in short, it's not a new government program. It's life insurance. So, deal with it.
So, because all insurance is state regulated, right?
Right,
So they
right.
could very well say, hey, there's a new state regulated auto insurance. Well, all auto
Yeah,
insurance is state regulated. Yeah.
right.
So yeah. So they use that terminology to kind of trick you in there. So, but my audience is smarter than that. So, okay. All right. So that's the number. Give them a call if you want to kick around your options. And David and his team will definitely help you out. And if you one of the things, David, I got to warn you, because I do a live Q&A every single day almost. I miss maybe one day a month. People come in, and any place I recommend, they come into the live Q&A and they say, hey, I just called David's team over there and they were awesome. Or, they keep us abreast of everything with everybody
Good.
that we talk about. So
Okay,
I know y'all are knocking it out of the park like everybody does. I've known you for a long time. And I know y'all are doing a phenomenal job.
perfect.
All right. I sure appreciate it. Hey, you take care of yourself, and we'll talk to you soon.
Thanks for having me, Ed. Take care.
All right. Take care. Bye-bye.